Hey traders, Raghee here, and in this recap video I want to talk about some interesting levels on the Dow and ones that I think we can continue to watch in the days to come. And it really emphasizes the importance of marrying price and technicals and why I actually favor price over technicals when it comes to making decisions about price. Now, the 200 EMA, which is what these white dots would represent across this chart, is a very well followed, powerful indicator. I mean, there's a psychological impact of a 200 EMA or SMA. That's the difference of an exponential moving average and a simple moving average. But there's an interesting, for me, there's an interesting difference between the two that leads me to want to use the exponential, which is when you use an exponential moving average, you're weighting more recent data heavier. And I do think there's a certain recency bias to the market, and I like the exponential better. And I've found over the past, 5 to 10 years, exponential moving averages are definitely gaining in popularity. So while the SMA is important, the EMA is taking on a lot of importance too. So I know that once we get down to that level, there's a pretty good chance we might find a bid there. Now, one of the powerful things about propulsion dots is you are never going to be hoodwinked into using a moving average when you shouldn't. If you were to leave a 200 EMA indicator up there in lieu of my propulsion indicator, which by the way is free, okay? Instead of using the EMA, use the propulsion, because if the propulsion is not lit up, literally lit up, if it's not showing at least 5 dots, then what I would tell you to do is not consider it. And here's what's great. If it's not lit up, you won't even hardly see it, right? So moving averages, instead of the EMAs, consider replacing them with multiple propulsion indicators. Because when they're visible, you know to use them. If there's at least 5 of them, they're valid. If there's not, you can say, thanks for the tip, but I can't use you. By the way, notice that the propulsion indicators are actually sitting around the what is that price level? Yeah, about 450 area. So there's going to be some resistance there from these EMAs. I've got at least 5. And this is a choppy market. It's a coin flip market, right? Choppy markets, flip a coin as to whether that day is going to be up or down. But when we reach an edge, like we did yesterday on the sell-off with the Iran news hit, the whole Iran news hitting the market, it was very interesting because the equities market sold off and tagged not the EMA. Look at those Darvas levels. This was automated Darvas 2.0 support. That, my friends, is price, and that is the power of price. So the 200 EMA gets my attention, but those Darvas levels, those get my pending order. So when you know you've got 2 levels like that in a zone, and we trade down like that on a lot of volatility, additionally, if that is exhaustive, which it was, all the more reason to think about whether or not the market might actually catch a bid and rally. And here we are closing very strong today after kind of a mixed non-farm payroll. Is this rally because of NFP? I don't know, but if you were to do nothing but look at that oversold level, this is a good old-fashioned oversold bounce off a lit up 200 EMA and a pair of Darvas levels doing a very good job. So think about what these daily time frames are telling you, even if you're a 5-minute trader. Think about what these daily time frames are telling you about important levels within this overall choppy range. I'll see you in the next update.